Hello, I'm Mark Abssy, Head of Indexing at Tematica Research, and welcome to the week ahead. Now, this past week, yes, it was volatile. We had a lot of, let's call it mixed messaging on tariffs. Friday was good, though. We did get a stronger than expected PPI number, meaning to say that it was lower than what was expected. So that buoyed stocks, and clearly by the end of the week, the Dow's up 5%, S&P up 5.7, NASDAQ Composite up 7.3. So overall, a good week. Small caps didn't quite get the full memo. They were up 1.8%. In as much as we saw kind of jubilation about kind of calling off the China tariffs, and indeed stepping back, and the whole business about the 90-day pause, it's still not lost on us that Canada tariffs are still going ahead. Mexico tariffs, from what we understand, are still going ahead, and again, the blanket tariff is still 10%. So it's not as egregious as what was initially planned, but there are still blanket tariffs in place that are scheduled to go into effect. So, while as was described, I believe in a B of A note that starting out from, hey, this is worse than the worst case scenario that anybody expected, to dialing it back to say, okay, we'll give another 90-day pause and everything's blanket 10% and all this kind of thing. That ultimately is better, but there's still going to be some pain. We're still seeing, CPI doing its thing, and it's not everything is fixed, right? Clearly, we're still dealing with, what are we going to do about China? China is still very much on the table, because even though over the weekend we saw that, the 145%, okay, for personal electronics and other laptops and things like that, now we're not going to do that. But then we also heard on Sunday that, we're not going to do it on the products, but we're going to do it on the components in the products, right? They're going to do it on semiconductors. And I believe that's a 20% tariff that they're looking to put on semis. Now, of course, they haven't come out and said, well, semis for what, right? Is it everything? Is it just vehicles? Is it not vehicles? Is it, what is it? So, kind of the fun continues in tariff land for those keeping tabs. And frankly, we'll just have to see what edicts come out of the White House, right? That's the only way that I can really, phrase it. Again, looking at last week, all sectors were up. Real estate was down slightly, assumedly on rates. When we look at the Tematica Select Suite, saw some strong double-digit returns out of nuclear energy and uranium, out of EPS diplomats, Rebuilding America model, and CHIPS Act. Slightly behind those, safety and security, and our AI model. Again, it's not lost on this that in as much as we had a good week in our long-only models, year to date, I believe our hedge model is still something like 26 or 27 percentage points higher than the broad market, than the S&P 500. So some clear statements made in this first part of the year. We will be keeping track of and seeing how that plays out, of course, through the balance of the year. Now, when we look at this week, of course, it's an abbreviated trading week, the Good Friday holiday, Easter weekend coming up. But that, it's still going to be pretty busy. I am sure that we are still going to be hearing plenty of things from the White House. And on top of that, we do have some economic data coming out, not a lot, but some things that people will be paying attention to. Of course, we're going to have March retail sales on Wednesday. And that top line number is actually expected to rise to about 1.3% gain from the 20 basis points that it was in the previous period. Of course, Wednesday, we're looking at retail sales. And again, these are kind of lagging numbers, but, you know, given the uncertainty, given the volatility in markets and frankly in policy, these are good to kind of see where we've been. It's not clear to me that anyone is using these numbers to do any manner of forecasting. One number that is, I think people are going to be interested to see what happens and if there's any surprise is in the capacity utilization figure. It's expected to tick down slightly from 78.2% to 77.9%, and industrial production on the month-over-month basis is expected to have contracted slightly, 30 basis points, and similarly in manufacturing production, contracted slightly, about 20 basis points. From a positive 70 basis points and a positive roughly 90 basis points. So definitely starting to see some reaction to the tariff environment. Again, given the volatility of the tariff environment, these are good numbers to pay attention to, but what usefulness they may have in projecting any kind of trajectory overall is debatable, right? Again, looking at this week, on Friday, we pretty much started the Q1 earnings season. We had some banks report, and a couple things to note. Early indications are, and as frankly should be expected in a highly volatile environment, those firms that have trading arms or deal in capital markets are going to be posting some good numbers, right? Because when things get volatile, traders like to trade. And they apparently have been doing that a lot. One thing that was interesting, Logitech announced, and they also announced that they're not providing guidance, again, because of the tariff situation, the volatility in the tariff environment. So it's interesting, it's tough to, they're not necessarily a bellwether. They are a large, consumer goods, electronic consumer goods provider. And it's interesting that, they declined to provide guidance. And frankly, we'll see if there are other names in tech and frankly any other sectors that will take that lead, right? Looking again to this week, as usual, we'll see a lot of financials kicking off this cycle. And like I said, it's pretty busy. Goldman Sachs, M&T Bank, Bank of America, Citi, PNC, U.S. Bank. Again, Interactive Brokers, right? Expect to see some good numbers there. Also on the insurance side, Travelers and Progressive, right? And the last couple of earnings quarters, frankly, with all the natural disasters that we saw and fires and whatnot in 2024, there were concerns about these companies' abilities to fulfill their obligation, and frankly, we've started to see this trend of them basically denying coverage simply because the risks are too great. So we're definitely going to pay attention to what they're saying about what they've seen so far, and of course what they see going forward. I talked about real estate dropping a little last week, about 10 basis points. SL Green Realty, which is the largest New York City commercial and retail realtor, property owner, let's say. So we'll be interested to hear what they have to say about what's going on in the New York City area. Along those lines, D.R. Horton is also going to be reporting. So as always, interested to what they are saying. They are more of kind of a high-end home builder. So again, it'll be interested to hear what they're saying about current builds and what their pipeline is looking like. United Airlines also, again, air travel, always a good indicator both of business and retail spending. One name that's going to be reporting, Alcoa, right? So, 25% tariff on aluminum. Very interested to see what's that, what do they see in the aluminum production smelting arena, what they see going forward as well. Um, Big one, we talked about, on Sunday, the White House came out and said, hey, blanket 20% tariffs on semis. Taiwan Semiconductor will be reporting, I believe, on Thursday. And again, we're waiting to see what their take is on it, right? If you've been paying attention to the news headlines, China, frankly, seems to largely be ignoring the rhetoric coming out of Washington. We'll see. We'll see what happens, and we'll see what Taiwan Semi has to say. Okay. As I said earlier, abbreviated week, Friday holiday, but still going to be a lot of information in terms of earnings releases. Like I said, lately the economic data that has been coming out honestly has been more in the lines of, oh, that's interesting, but again, just given the volatility of the messaging and potential regulation coming out of the White House, the kind of efficacy of those numbers as predictors, frankly, it's just being reduced and reduced. Don't get me wrong, they're good numbers to know, and it's good to know kind of where we are. But the idea that the progression of those numbers will somehow stay or stand, frankly, there's just too much volatility in the messaging. So, we'll be keeping an eye on everything. And of course, beyond economic data, beyond earnings, there's, of course, what's going to come out of the White House, right? So we'll be paying attention to all of that. And I guess we will get together next week and talk a little bit about it. Thanks.